Hello, hello. Today we are going to solve Jan 2025 paper question number 2, part F. Complete the schedule of non-current assets. Okay, so the information is given. Before that we had prepared the motor vehicles account, the provision for depreciation account and disposal account. So now let's start preparing the schedule for non-current assets. So the first one is the cost. Okay, the balances he is asking on 1st uh, of Jan 2024, which is given here. So you just copy that directly, 40,000, and here it is 13,000 pounds. Then what were the additions? That was additions which was purchased. So it is 26,000 was a purchase for motor vehicle. So let's write that. Then there was nothing for fixtures and fittings. Yeah, it was purchased, like 3,000 was purchased. So now let's add up these two total. So 40,000 plus 26,000. Okay, and then that is 66,000, and here I have 16,000. Disposal. The disposal has happened only with the motor vehicle and the cost was 16,000. So let's write that. So the disposals, here there was nothing, no disposal of fixtures and fittings. So what is the total cost of the motor vehicle and fixtures and fittings remaining on 31st December? So you subtract 66,000 minus 16,000. So that will give you the value of 50,000. Then for the fixtures and fittings, it will be just 16,000. Then we have to do accumulated depreciation. We have to subtract. So what was the balance on 1st Jan 2024? So the first balance was 24,000. And here the balance was 7,800. So let's write that. And then we have less depreciations on the disposal. So the item which was disposed, we saw that it had an accumulated depreciation of 16,000 minus 4,000, which is 12,000. So we have to remove that. Okay, we have to remove that depreciation, okay, from the total accumulated depreciation. So what is the depreciation? And there was no disposals for fixtures and fittings. Okay, so you put none. Okay. Then you depreciation for the year ended. So this year's depreciation we had already calculated in the previous one. Okay, it was 7,500. So let's write that. So this year's depreciation was 7,500. And for the fixtures and fittings, so let's calculate here. For the fixtures and fittings, so the total 15% of the total cost is 16,000. So the value is going to be 2,400. So this is working. So let's write that. So here it is 2,400, this year's depreciation, okay, of the remaining vehicle. Now the total depreciation which is left at the end of December 31st. So 24,000 minus 12,000 minus plus 7,500. So that is going to give you a value of 19,500. Okay, here on this side 7,800 plus 2,400. So that's going to give you a value of 10,200. Now finally we have to find the carrying value, which is 50,000 minus this total depreciation, which is going to be equal to 30,500. And 16,000, okay, 16,000 minus 10,200, it will be a carrying value of 5,800. So this is how you prepare the. So the Jan 2025 question number 2 part G, evaluate the use of single method and a single percentage rate of 15% for the depreciation of all non-current assets. So Casey is using 15% depreciation method for motor vehicle fixtures and fittings. So let's evaluate this thing. So if she applies a single method of depreciation policy, that means she is following consistency concept, and also the use of non-current asset to the business will be the same each year. Therefore, it seems appropriate to charge the same depreciation. The use of both will be the same, we can assume. And profits will not get distorted by higher or lower depreciation sums from one year to other year. And also if she uses a straight line method, the total cost of owning the non-current assets, it will increase when maintenance costs are considered to be raising. So, and it is simple to use and also easier to calculate. Then the negative points against a single depreciation is method is not all current assets are going to depreciate at the same rate. For example, motor vehicles might depreciate at a faster rate. Okay, so they will lose a significant value in the earlier years and less in the later years. Therefore, a diminishing balance method for motor vehicle could be more appropriate for motor vehicle, and a straight line method could be used for fixtures and fittings. So the market value of the non-current assets in the statement of financial position of Casey may be significantly higher than the actual market value of the assets. So the market value prices will be different. And also the profit of Casey may not be accurate, as the depreciation chart on each year may get understated. So in conclusion, Casey can apply straight line method because, for example, for sole traders, it is a simple method of calculation and it's easier to use and it is convenient for her. So probably she can continue and not change the method of depreciation.